On this board, we're talking about VA loans. What are VA loans? VA loans are mortgage loans that are guaranteed by the United States Department of Veterans Affairs, the VA. Now, when I say that they're guaranteed, right, by the VA, what is the maximum guarantee? The maximum guarantee is 25% of the purchase price or sales value. Who is the VA loan designed for? The VA loans are designed for our nation's veterans, military members currently serving, reservists, and select surviving spouses. Now, what properties are VA loans available for? Well, VA loans are available for the purchase of owner-occupied single-family homes or multifamily dwellings up to 4 units. What are the main benefits of VA loans? The main benefits of VA loans are VA loans provide veterans with an opportunity to receive a mortgage with no down payment and no prepayment penalty. What are the 2 documents that are required for eligibility of VA loans, right? I'm not talking about for approval, right? I'm just talking about for eligibility. What are the 2 documents that are required for eligibility? Here they are. 2 documents needed for VA eligibility is number 1, the COE, which is the certificate of eligibility, and the DD-214 or the NGB 22/23 or statement of service. Now, what is the certificate of eligibility, the COE? What does that do? Well, the COE verifies eligibility based on length of service. And what is the DD-214? What does that do? Well, the DD-214 is basically discharge paperwork, right? So it's the paperwork it's the discharge paperwork of military people who have been discharged from the military, right? It's the discharge paperwork. And what is the NGB 22/23? That's just general orders, right? And statement of service is self-explanatory, right? Statement of service. All right, so now for VA loans, what are the main qualifications, right? Like what are the qualifications that a military person or a retired military person or a surviving spouse must meet in order to qualify for a VA loan? Well, number 1 is back-in ratio, right? The back-in ratio. The back-in ratio can be no more than 41%. Now, what is the back-in ratio? How do you calculate that? Well, the back-in ratio is calculated by taking the total housing expenses and dividing that by the gross monthly income and multiplying that by 100, right? That gives you the back-in ratio. And in general, the back-in ratio of the borrower can be no more than 41%. Now, number 2, sufficient residual income, right? The borrower must have sufficient residual income. Now, for the purposes of VA loans, what is residual income, right? Now, there's different definitions of residual income, but for speaking about VA loans, the definition of residual income is this: the amount of discretionary income left over each month after paying all major expenses, including mortgage payments. Now, number 3, the borrower must occupy the property within 60 days after closing and plan to stay for at least 1 year. Now, what about mortgage insurance? Question for you. Is there any type of mortgage insurance associated with VA loans? The answer is no. VA loans VA loans do not have any type of mortgage insurance. However, instead of mortgage insurance, there is a one-time non-refundable variable VA funding fee. The funding fee may be financed into the loan, and the typical funding fee is 2.15% of the purchase price of the home. The funding fee may be waived for veterans with disabilities or surviving spouses, right? Now, what is the maximum fee that the lender can charge on a VA loan? What is the maximum fee that the lender can charge on a VA loan? Well, the answer is 1% of the loan amount to cover costs, right? So the lender can charge up to 1% of the loan amount to cover costs. Now, regarding a VA appraisal, what does a VA appraisal do, right? So the reasonable value of the property is obtained through a VA appraisal, which is also called a certificate of reasonable value, also known as a CRV, or notice of reasonable value, which is also called a NOV. Now, regarding seller concessions, how much of seller concessions does a VA loan permit? Well, and by the way, like before we get into that, question for you. What is a seller concession? What is that? Well, seller concessions are when the home buyer requests that the home seller pays costs associated with the loan on the behalf of the home buyer, right? Now, how much of seller concessions is permitted on a VA loan? The VA permits seller concessions, but requires that the seller concessions do not exceed 4% of the loan. What is the maximum term of a VA loan, of a VA loan? The maximum term of a VA loan is 30 years. And what is the late fee regarding a VA loan? The late fee regarding a VA loan is 4% of the monthly P&I. And what is P&I? P&I is principal and interest. And keep in mind, it's 4% of the monthly P&I only the monthly P&I. It does not include insurance and taxes, because you know, like the housing expenses would be PITI, right? Principal, interest, taxes, and insurance. But when it comes to the late fee for regarding a VA loan, the late fee is 4% of only the P&I, the principal and the interest. So to recap, VA loans are mortgage loans that are guaranteed by the United States Department of Veterans Affairs, the VA. Now, as a side note, all of this is just general information, right? For those of you that are studying to become licensed mortgage loan originators, I highly recommend that you guys check out the exam prep course called Affinity. And in particular, they have a course called the Mastery course, which I'm in, and it is awesome. It is awesome. I highly recommend it. It really is very thorough and very detailed, you know? So if you have any questions, feel free to drop them in the chat box below, and I'll see you next time on the next video.